Welcome to Nasdaq Trade Talks. I'm Jill Melandrino, Global Markets Reporter at Nasdaq. Wells Fargo Investment Institute released 2022 Outlook, Which Way to the Recovery, a report examining how markets have reached a crossroads at the start of 2022. And despite a third straight year of strong price gains in the S&P 500 index, many investors now perceive a delicate balance between further equity gains and the unraveling of the high risk-taking environment since the economy reopened in 2020. Joining me to discuss is Tracie McMillion, Head of Global Asset Allocation Strategy with Wells Fargo Investment Institute, for her outlook on 4 key asset classes. We're also going to take a look at her top 5 portfolio ideas for 2022. Tracie, it's great to have you with us. Welcome to Trade Talks.
Thank you, Jill. I'm happy to be here.
All right, Tracie, let's start with your equity outlook. What did the report find?
So for equities, we find that we are going to experience record earnings in 2022, but the pace of earnings is probably going to slow down some. We expect the S&P 500 to move from about 210 in earnings this year to 235 next year, and that's about a 12% gain, which is a very attractive gain for investors. And we think that's going to come from revenue growth. We think margins are going to continue to be strong here, and we think that PEs are probably going to be range bound. So all of that sets us up for a good year in equities. But because we are moving kind of beyond the beginning stages of this recovery, we're almost 2 years in now, we think that we need to move up in quality for equities. So, look at mid caps and large caps. They tend to be the most high quality areas of the equity markets. And, in terms of looking at international equities, we do continue to prefer U.S. over international. We think that developed markets are going to have, some challenges from higher energy prices, and that emerging markets are going to face some challenges from some of the regulatory issues in China.
Right. And what about global fixed income and the impact of central bank policy and inflation?
Yeah, so we think it's going to be a transition year for global central banks. They're moving away from this very accommodative policy that they instituted during the pandemic towards a tighter framework. So, the U.S. Federal Reserve has said that they're going to end tapering this year, and they're probably going to start raising interest rates. There's a lot of debate as to how much they're going to raise interest rates. We think probably one time next year, and that puts us a little bit, less than most of the street. But we think that, tapering ends in the first or second quarter, and then maybe one interest rate. And then towards the back end of next year, we're probably going to see inflation starting to cool down some. Growth is probably going to be starting to slow. Of course, we've got midterms in the second half as well. So, we think that that's going to be a tough environment for the Fed to continue to tighten. And other central banks may move a little more quickly than the Federal Reserve, but we think that interest rates in developed markets are going to remain really low, towards zero, maybe even stay negative, and emerging markets will continue to tighten their policy, especially as we see the dollar continuing to strengthen.
It's so interesting what you say about the midterm elections and the impact to the Fed. I mean, as far as I can recall, you just don't typically tie in politics as much as we have recently with the Fed. So it's interesting that your outlook piece brought that up. Are you favorable on global real assets?
So we are, but I want to break that into a couple of different categories. There's commodities, there's real estate, and then, there's also midstream energy companies. So, 3 different areas we're looking at there. We like commodities. We're still favorable on commodities. We think demand continues to outpace supply. We think that within commodities, gold and oil are probably going to be your top performers. But there's going to be, we have a target for gold at 2,100 at the top end. We have a $95 top end oil target for next year. So some opportunity there. Within agriculture, we might see some overplanting. So we're a little more cautious there. And then within industrial metals, again, that China slowdown is worrying us a little bit with industrial metals. Within real estate, we think the demand is there. We think the economy stays strong, but those rising interest rates do tend to be a headwind for real estate. So more nuanced, more neutral there. And then for midstream energy companies, what we see there are very attractive yields. So, that's an area for investors who are looking to get away from some of the really low yields and bonds towards something that might be yielding a little bit more. Of course, it has risks that go along with it, but it is a space to look at.
All right, and probably a great segue for this question. Why are investors pivoting more to global alternative investments?
Yeah, we've definitely seen that. And I think we just hit on it, those low bond rates. So investors are looking for non-bond alternatives to hedge equity exposure. And so they're turning to things like hedge funds. We think that hedge funds have maybe a bit of a different role in 2022 than they did in 2021. In 2021, they may have been accretive to return. In 2022, we're looking for more strategies that have less correlation to equities. So, things like macro. Macro tends to be a really good diversifier in a portfolio. Relative value is another one that is less directional and a good diversifier. And merger arbitrage is an area that we think investors should take a look at. Corporations have a lot of cash on hand, so we don't see a big risk of a big default cycle coming here. And also, there's more uncertainty about whether these mergers are actually going to happen or not. So the arbitrage spreads are greater, and there's more opportunity there. And then finally, I'd say within private capital, we are seeing investors look at private equity and private debt. Within private equity, we'd say, small cap, mid cap buyout, venture is an attractive area. Secondaries are a little concerning because of all the cash that's flowing into that space. And again, for investors looking for, something to boost their yields, direct lending is a strategy to take a look at there.
All right. And finally, we'll save the best for last. Your top 5 portfolio ideas for 2022.
Yeah, so number one is that we favor U.S. assets amid an uneven global recovery, so U.S. over international. Number two, we want to look for opportunities to add risk judiciously. So we're not shying away from risk here, but we just want to be cautious, move up in quality within fixed income and equities. Our third idea is to seek assets that perform well when inflation is above average. So we think that, we're going to see inflation moderating to about 4% next year, but still mid caps, commodities tend to perform well during those above average inflation periods. Number 4 is to remain cautious on yield sensitive assets. Be cautious about your fixed income exposure, especially at the long end. Utilities, a sector of the equities markets that tends to be very yield sensitive. Be cautious there. But on the other hand, financials usually do well when interest rates go up. So, that's a place where you can invest. And number 5, diversify because return contributions do change over time. We've seen the alternatives and real assets really coming into their own as contributors this year. And we think that pattern is going to continue. But equities is the dominant force within most portfolios for return contribution. And because we think they're going to be higher, we continue to kind of overweight equities over fixed income.
All right, Tracie, we appreciate the comprehensive insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.